also podcast, long time no see. Originally, I have decided to take a 6 months break from this YouTube channel, but because last night the stock market crashed, so a lot of people email me and ask me what will happen to properties. So I've decided to take this video to answer all your questions at one go. Last night, the S&P 500 and Dow Jones plunged almost 10%. This is the worst day since 1987. So what will happen to properties then? If you are conservative people like me, and then you've been following my blog, you won't be rushing to the new launch and buy up the units. And you will be stocking up on things, not wines or toilet paper or instant noodles, but stocking up on your cash, safe haven like gold or buy some immersed ETF. So you and I are doing fine. A lot of people are saying that I've been pessimistic, I've been talking about a possible market crash or bear market, but that's not true. For retail investors like us, honestly, anything that happens to the market is not under our control. So what we want to do is, we don't care about the developers, the agents, or the banks. We want to cut our loss to the minimum. After years of disciplined saving and prudent investment, whenever there's anything happen, the most important thing is to protect our capital. If you tell me that I cannot even protect my capital, no matter how attractive is the return, I'm not interested in it. As they say, everybody will suffer in a market crash. But there's a level of difference, a degree of difference. Just like you may be asked to retrench a staff in department, but you don't want to be the one to be retrenched. You cannot do anything if the value of your home declines, but you don't want to be the one that the bank asks you to sell your unit. When stock prices plunge, investors sell whatever they can to cover losses and margin calls. What will happen to the property market then? Among the property sectors, commercial properties will suffer the most, especially the industrial properties. In Singapore, manufacturing and export have been on the decline for quite some time. Money printing has helped a booming economy and inflation of asset prices, but consumers don't benefit from it. They are not spending. That's why there is overproduction. With coronavirus, the manufacturing sector will suffer more. According to Knight Frank auction, in 2019, the number of mortgages sold in industrial properties increased 34.2%. And you will see this trend continue. In any auction, you will see that there will be a majority of the auction properties, they are factories or industrial properties. Another reason is, since 2012, there are courses in the market teaching agents how to market industrial or commercial properties. And there are amateur buyers in the market buying those factories and commercial properties they know nothing much about. So you will see more and more industrial properties under mortgage sale. What happened to the retail sector? Under Budget 2020, the government announced that there's a 15% tax rebate for the retail sector. But it is up to the landlords when, how, and whether they refund the 50% rent rebate to the tenants. It depends on their eligibility. Under coronavirus, the shopping malls in tourist areas will suffer the most. And then with this stock market crash, people don't have the mood to spend and dine. So the retail shops will suffer more. So you're seeing a lot of strata title retail shops in the auction, and there will be a lot of fire sales. What about the office sector? The Grade A offices are not doing well after NPS sold off their Deal Tower last July. And with market uncertainties, the companies, they're not hiring. They are restructuring and they're downsizing. They don't need that much office space. They will be moving to a smaller office and they'll be moving out of the CBD. If you're looking for good buys in the commercial sectors, do take note of the high vacancy rate and the supply in the pipelines in the coming years. There's still lots of supply in the market, and you might have difficulty finding a tenant unless you are a manufacturing company that's looking for factories to rent, or you have your own business to run in a retail shop, or you can occupy some office space. Do take note of the difficulty in finding a tenant and a high vacancy rate and the plenty of supply in the coming future. The last thing we look at is the residential market. Would there be a lot of undervalued properties and fire sales in the residential properties? I think there are two markets over here. The first one is the homeowners who will be selling their homes, and the second one is the property investors market. For homeowners, it's quite unlikely they will let go of their own home at a big loss, because it's the last thing that anyone will do is to sell their own house unless they really lose their job, or unless that the business fail and they need the cash, or they cannot pay off the bank. And thanks to TDSR that's introduced since 2013, there are less people who are over leveraged on their properties unless they really buy before 2013, before introduction of TDSR. The second one is the property investors market. And these people, if they've overcommitted, they may want to cut loss before it is too late. And especially about the uncompleted projects. The banks may be tightening the loans again for those approved loans for uncompleted properties, like what they have done in 2009. If these people are unable to top up, they may have to let go their properties. Then there would maybe good buys in the sub-sale market for these uncompleted projects. You may be able to find a very undervalued property in the market, but after the cafe is locked, people will see your transaction at the benchmark price for the whole project, and then they may be able to buy lower than yours. So do take note that after you buy a very good undervalued property, the prices may still continue to drop. So the good question over here is whether residential market will be like in 1999 when there's a deep V shape for the downturn, or whether it will be a very prolonged deep U shape like what we have seen in 2002 to 2006. So do prepare for both. Wherever that you're buying in this market, make sure that it is affordable to you and you have holding power, because we might have to endure the downturn for quite a long time. That's what I have to say today. I hope you enjoyed this video, and please give me a like and subscribe to my YouTube channel. I hope to see you again soon.